Jonathan, thank you very much for coming along to chat with us today. A number of our clients are asking, with regard to the recent stock market correction, exactly what's happened. I just wonder if you could give us a potted version of recent events, please.
Thank you, Brian. We certainly have seen some significant moves in stock markets recently, particularly over the last couple of months, and there's been probably 2 or 3 reasons, I think, for that. First is we've seen some fairly significant policy actions from the Chinese, from devaluation and direct involvement in the stock market, and obviously that China is a major global player, and that certainly hasn't helped certainty. With respect to the US, we've seen some forward interest rate guidance from the Federal Reserve that has been mixed, and again further adding to uncertainty as to when interest rates are going to rise, and that's clearly one of the big issues facing the market. And then thirdly, we've got to remember that we've had 5 very strong years, and equity market valuations were looking expensive in certain areas. And I guess the markets use this as an opportunity to take some profits out of those.
Thank you, Jonathan. What are your thoughts, though, with regard to short-term expectations?
In respect of short-term expectations, I think the correction that we've seen has meant that equity markets have moved much more towards a fair value, and I hope that will put some support behind them in the short term while we see what direction the Federal Reserve takes with interest rates.
Thank you, Jonathan. What are your views then on interest rates for the future, and how are you positioning the funds to take advantage of them?
Our expectation for interest rates, particularly in the US and the UK, is to see increases. Whether we see them this year is very difficult to tell, and I think that will be led by the data that is released over the coming months. But certainly I would expect the US to lead the way with raising interest rates, and I wouldn't expect the UK to be far behind that.
So with regard to the reduction in value in the investment markets, how have you positioned the funds going forward to take advantage of those reduction in prices to make good quality purchases for the future?
In terms of mitigating losses, it's very difficult to see the actions that China has taken, but we've held significant positions to defensive UK equity with their high dividend yield, and that does and has protected unit holders in the shorter term. Given the falls that we've seen, particularly in the more adventurous find, we're reallocating to those areas that have, we believe, been disproportionately affected by that. So we've recently added to positions in both the UK and the European market, and are considering increasing our weightings to the Japanese market ahead of their decision on quantitative easing.
Thank you very much, Jonathan, for that overview. Thinking about the future and looking at how the Brunsden asset management funds are positioned, we still feel very confident that the asset allocation selections are correct for the future, and that we are very well positioned to take advantage of opportunities which will arise. We're very confident that the funds will perform to their mandates, and if you have any questions or queries at any stage, please don't hesitate to be in touch with us. Thank you.